There's been some relief to risk markets on Tuesday after we had seen another intense round of risk liquidation in Monday trade on the back of escalated tension between the U.S. and China. Developments relating to a trade deal or lack thereof between these two major economies are not being taken lightly by any stretch and have been the primary driver of market direction over the past several days. The situation had intensified on Monday after more threats were thrown out by President Trump, and it looked like China would be more than willing to counteract any U.S. measures with moves of their own. As of now, reports have said the U.S. administration plans to impose 25% duties on about $300 billion of Chinese goods, while Beijing has said it would raise duties to 25% on nearly 2,500 U.S. goods. But on Tuesday, the market is feeling better about President Trump's latest words, in which he has said he looks forward to talks at the G20 and has a good feeling talks could wind up being very successful. And so a lot of that Monday downturn has been wiped away, despite things still being very much up in the air. Our biggest concern with all of this is less about fallout from global trade setbacks and more about any setbacks to the global economy at a time when that next negative shock to the global economy could really do damage, given how exhausted accommodative central bank policy and government stimulus are after the 2008 crisis. Moving on, the pound has dropped back a little more on Tuesday after the UK employment report came in a little softer overall, but we continue to hear news of bids into dips from medium-term players. Gold has also put in an impressive rally in recent days on the downturn in risk, and Bitcoin is doing its best to claim its own safe haven status, with the crypto asset going parabolic and absolutely on fire over the past few sessions after already enjoying a healthy recovery out from multi-month lows in recent weeks. If we're to consider the fact that central banks and governments no longer have many tools left at their disposal to stimulate recovery, given how low interest rates are and how much has already been injected into the global economy post-2008 crisis, it might not be all that surprising to see added demand for a decentralized cryptocurrency that has a fixed, limited supply and also cannot be inflated. That being said, technical readings are through the roof, with the daily RSI tracking at insane overbought levels above 90 into Tuesday. That's all for now.